I realize the economy is feeling pretty solid right now, but that's exactly what it was like before all of the major economic crashes over history. Let that sink in for a bit. Now, as your own personal digital wet blanket, I'm here to tell you about a few of the things that we look at to understand where the economy is going to go. I know the government's saying that we have low unemployment, really strong GDP, and stock market's doing better than ever. So we're going to break that apart, get into that a little bit, and then I'm going to tell you about things that actually matter about where the economy is going. The things that I look at, like, for example, manufacturing, monetary creation, debt levels, the trade deficit, bankruptcies, delinquencies, and defaults. But maybe that's just me. Now, you're going to want to remember to subscribe to this channel. We're going to help you guys through this economic downfall that we're all going to be going through together. If you simply subscribe, it really helps us out. We can get more great videos like this for you all the time. But let's talk first about the really strong unemployment rate. It's great, and I always tell you it's kind of like a tax on small business, but if you put that aside, it's really good to have low unemployment. However, it depends on the exact types of jobs that are being created. If it's all government jobs, for example, that isn't helping the economy at all. It's just increasing the expenses of the economy, the expenses to run the government. Now, a lot of people are taking on multiple jobs right now, even when they don't want to be. I'm going to show you some charts about this. This is from the St. Louis Fed. The multiple job holders as a percentage of the employed people, 5.3%. Now, this is from USA Today. When one job just isn't enough. Why are growing numbers of Americans taking on multiple gigs? The number of Americans working 2 or more jobs suggests more of us are feeling inflation's pinch. And right now, about just under 10 million people have multiple jobs. And I want to get into one more article from USA Today because it's very relevant here. U.S. job growth has been surprisingly sturdy this year despite the Federal Reserve's sharp interest rate hikes and stubbornly high inflation. One big reason? The government. That's what I'm talking about. All the government jobs came out and they say, look at all these jobs we created. People take 3 part-time jobs, that's 3 jobs. The government counts that as 3. The government makes 50,000 or 500,000 new government workers. All of a sudden there's 500,000 more people working. This is a report from Deloitte, the Deloitte Research Center for Energy and Industrials. I'm going to show you a couple of charts in this. This is annual construction spending, and you can see here, all this construction is going to translate into what? Completed construction, which are homes that people will be moving into. I told you that the inventory will heal itself. This is part of the process. This is labor market tightness. The higher this figure, the higher this value, the fewer jobs and the more people who are trying to fill all those roles. As the labor market loosens up a bit, there will be more jobs than people looking for jobs. But right now, there's a major glut of jobs and a dearth of workers. That will take care of itself as well as more firings get processed through and absorbed by the market. There's been a lot of big name firings recently, as you've probably heard of. But this is the lead time. I want to show you this one. The lead time for production materials, 37% higher than pre-pandemic levels. This is how long it takes from origination of a purchase order to completion. So the government's telling you there's all this GDP growth, and a huge chunk of it is just more government jobs. And this is from EconLib, government hiring, raising GDP by definition. The more they hire government workers, the greater the GDP, and the lower the unemployment rate. It's kind of like if you got rid of all the police in a city, the crime rate would go down to 0, but that wouldn't mean there's less crime. You just wouldn't be catching anyone. The other thing that the government's touting as a strong economy is look at the stock market. Look at the stock market. Even though the Federal Reserve in writing has said that they're going to try and generate the wealth effect by increasing the prices of stocks, real estate, it's not like they're surprising you in what they're doing here. They're trying to drive up a lot of everything. And at the same time, handle the debts. And the way they're doing that is by creating more money, more quantitative easing, liquidating the money in your pocket or in your wallet. And I realized last video I needed to clarify something where I was talking about how they steal a little bit of money from everyone. They steal a little bit of money from everyone. It's because they're creating more dollars, more money. So the value of all the dollars out there gets diluted down because there's so many more of them. That's all I was trying to say. But in terms of the stock market, I still don't trust this market. I want to wait a week to find out whether or not that was an actual double top in the S&P. And it wasn't a perfect double top. It was a bit higher, but there's a lot going on. That's like 2 years, 3 years ago. So it's close enough. We're going to see this week if the S&P starts heading lower or if it starts breaking through and keeps on going higher. Either way, I still do not trust this market as far as I could throw it. Just remember that Venezuela had the world's best performing stock market right up until they got into a little bit of hyperinflation, and the economy is completely in ruins now. And just while we're on the topic of stocks and stock picks, at the bottom of this video I've put an entire stock pick report from the Peter Leeds team to show you guys what we come out with and why we are one of the world's most popular, world famous financial newsletters ever. But now that's what the government was touting, the high GDP, low unemployment, and the stock market. They're saying these things prove that the stock market and the economy is so healthy. Now let's talk about the stuff that I look at. This is from the Bureau of Labor Statistics. It's good you can break down and see where all the jobs are coming from. But what I want to show you is a little bit further here. Hang on a second. There's manufacturing, wholesale trade. Hang on, we're getting there. Sorry, I forgot I was at the bottom. Leisure and hospitality. You can see after the pandemic how many people were hired as servers, bartenders, waitresses, chefs, etc. Here's the one I want to show you. These are new hires in the government. And all of this is adding to GDP and employment, or subtracting from unemployment. Look at all the jobs we're creating. Look at all the GDP we're creating. But all we've done is make the entire economy and the entire nation more reliant, buried beneath a bigger mountain of unpayable debt. This is from CNBC. The economy isn't sick right now, economists say. Here's why Americans still feel like it is. Here's your consumer sentiment index. And it's just how people feel. It's not what the actual result is. It's just about that they feel more optimistic or less optimistic. So right now it's not at an all-time low, but it's a lot higher than pandemic era times. Here's average hourly earnings in the US and consumer price index. The top one is the hourly earnings. You're only now recently outpacing inflation in terms of earnings. And if you know someone who's just living off their credit card, they're buying a brand new car, they're going out to fancy dinners, that doesn't mean that they're getting healthier financially or wealthier. It means that they're spending on their credit card. That's the same thing that the federal government of the United States is doing. They're creating new money. They're taking on more debt to pay for things. I show you all the time. This is a chart from the Federal Reserve showing you monetary creation. You notice anything alarming about this chart? At the same time, now we have so much debt. The chickens have come home to roost. Now we have the debt for the things that we've purchased previously. Here's a chart from Trading Economics that I want to show you. This is U.S. government debt. And I'm going to go to a second chart here, the U.S. gross federal debt to GDP. And to round out the Trading Economics charts, this is government spending compared to the gross domestic product. And to take it down another road, let's talk about the trade deficit. Here's a chart of the trade deficit. We spend a lot more by buying things from other countries than we sell to them. That's the trade deficit, demonstrating the deficit in trade that we have had for an ongoing number of decades. And of course, if you want to know about the health of the economy, you also have to look at, bankruptcies. This is from Courthouse News Service. American bankruptcy filings hit first post-pandemic rise. After several years of decline, U.S. bankruptcy filings increased nearly 17% last year, according to data published by the Administrative Office of the U.S. Courts. Going on a little further in this article, it says, many bankruptcy scholars, I didn't know that was such a thing, but many bankruptcy scholars attribute the trend to two post-pandemic trends. the rising of interest rates, and the expiration of financial aid programs. Well, I disagree. I told you ages ago, before any of that, I told you about how this was coming up. If you remember, I would always say the default deluge and all the bankruptcies. We're going to have a tsunami of bankruptcies coming up, and this is what it is. I told you so long ago. And then these things came along like the stimulus programs, and interest rates went higher, and now they blame all these bankruptcies and defaults on those two things that were a factor when they weren't even a factor. I told you this is what was going to be happening. And they would have happened without increased interest rates. They would have happened without the stimulus checks going out. This was a matter of time. It just made it worse that interest rates happened to be so much higher. This is going to make things happen in a faster way. This is from S&P Global Market Intelligence. U.S. bankruptcies hit 13-year peak in 2023. There's even already been 50 new filings in December. And while we're talking about bankruptcies, now we'll talk about defaults, delinquencies. This is from Business Insider. Americans' consumers' debt stress is mounting. Mortgage rates top 7%, credit card liabilities hit $1 trillion, and now auto loan defaults are on the rise. And you guys remember how the supply chains got scrambled and then it made things take longer to get anywhere, to cost more once they got there, and it caused other inflationary pressures around the edges of it? When the shipping gets snarled or scrambled, like I like to say, it makes things cost a lot more, take longer to get here, engenders inflation throughout the whole supply chain. And everyone's talking about the Suez Canal and the Red Sea, but very few people are talking about Panama Canal, which is having problems right now too. They ship about 6% of the world's goods goes through the Panama Canal every day. And they've got all sorts of problems because they've had a drought, there's not enough water, and so now there's a big backlog of ships trying to get through the Panama Canal. Plus you got the things going on in the Middle East and the Red Sea, the Suez Canal. Things are going to be getting scrambled again for all supply chains. This is from Global News. Panama Canal drought adds further strain on global trade amid Red Sea crisis. Since last year, severe drought conditions have reduced water levels in the critical trade route connecting North America and Asia, forcing canal authorities to reduce ship crossings and even hold auctions for when vessels can pass through. Some companies, get this, some companies have planned to reroute to the Red Sea. But the Houthi attacks and subsequent Western military response have dashed those plans. This is a substantial global issue, Daniel Treffler, a trade economics professor at the University of Toronto's Joseph L. Rotman School of Management, said in an email. Ships will not move, manufacturers will not get their parts, retailers will not get their stock, and consumers will feel the pinch. But overall, you tell me. I want to take the you tell me test. What do you think? How do you feel? Are you saving up? Are you paying down your debts? Are you making more than you did 2 or 3 years ago? How do you feel about the economy? Do you feel secure, stressed? I don't think that this economy is good. I think you're being told it's good, but no one's feeling that it's good. So don't be one of the sheep that are going to be led by this jawboning that everyone is obeying or seeing or thinking is accurate. They're all going to get blindsided. A lot of people who get blindsided are going to be financially ruined. Now you're going to want to get our next message to help keep you on the right side of things as we go through this economic downfall. And the way to do that, which helps us out too, and it would be greatly appreciated, is if you subscribe to this channel.